Beyond market headlines to understand the reasons for the day's movers and shakers and get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
The high which the market made was 24,702. And that remains the first level.
If you took away gold from core, then it falls to actually 3%.
24,487, 0.4 lower.
Dollar's been consolidating post the 10% fall we saw over the last 4-5 months.
But more importantly, EBITDA grew to 845 crores.
Be the mid caps, which is up 0.6%, be the bank nifty, which is up 0.1%.
The Indian industry hopes China will ease the supply of specialty fertilizers as well.
It will help Paytm be more competitive than before.
Most of the sectoral indices in the green as well. Good earnings and some good handover from Asia as well.
Well, that is the day so far, and the markets are at 24,642, which means we're about 150 points in the green at this stage, not quite at the highs yesterday, and that remains the first resistance level, the high of 24,702. So we'll see if the market's got it in it to kind of sort of take those highs out, but that's the first port of call as far as the Nifty is concerned. For the Nifty Bank, it's a 0.25%. It's an inside day. I mean, we are basically trading within yesterday's high and low, so there's not very much to take away in terms of price action there. Small cap and mid cap indices are doing much better. You got about 0.6, 0.7% gains coming through there. As well. Let me just quickly run you through what's lined up here on the program. Paytm is a stock which we will address. Stocks at a new 52-week high. There is regulatory easing which has come through. Ritu joins us on that. NSE has slipped as valuation concerns weigh post a mixed set of first quarter numbers. Stock's done very well today. It's down about 5-6%. Apollo Hospitals up 6%. We spoke with the management numbers at a beat, and you'll hear that commentary coming through as well. Hindalco is the other one. Top gainer on the index after copper and aluminum segments outperformed expectations. And Nigel will take us through that. So that's what's coming up here over the next 60 minutes. But let me welcome in Nigel and Rima, who are with me. Guys, good afternoon.
Hi, good afternoon. We expected a positive start, but this has turned out to be a little better than where the start is. So one was a softer CPI print. Asian markets closed very well. Hang Seng 2.5% up. Japanese markets were strong from the word go, so 1.5%. Europe right now is up close to about 0.5% across the board. So global markets have been fairly buoyant, and plus we had fairly good earnings reaction. The top two Nifty gainers are reacting to numbers, whether it's Hindalco, Apollo Hospitals, and so many in the mid-cap space as well.
Well, today's trading session is such where it reminds me of the 1990s, right? The Indian cricket team, when everyone scored, Sidhu, Azhar, everyone did well, but Tendulkar didn't score, at that point of time, because the Nifty Bank is not able to get itself up. And that is the problem. If Tendulkar scores, then that score looks even bigger. The run rate comes about, the pressures on the opposition. Now, as we speak, that Nifty Bank is not performing. So that is a bit of a worry. Otherwise, the team is in good form. You have stocks like Hindalco doing well, Apollo Hospitals, but both of them together, I think they account for 2.5% of the Nifty. That's the only problem pocket. And the Nifty Bank at any kind of bounce is getting sold into. So Tendulkar or Rima.
Not me.
The Nifty Bank needs to find its form. If that is the case, there's a genuine fear for the bears because this market is net short. Any kind of good news can pepper up. So let's see whether or not Nifty Bank can find its form. I think that's the most important trigger from here on.
Now, I think the big one to watch will be the Friday meet, right? Earnings is largely done. You've got a BPCL, and a few of the mid-caps, but that triggers out. So I think looking ahead, it's the...
Actually, it was till 2 days back, it was just one event on Friday. Now it's two. It's also the speech from the Red Fort, Prime Minister Modi, right? I think expectations are... I don't know how much of it is, of course, going to happen, but, this 1991 type of... It sounds very cliched, but actually, if you think about it, it is true. I mean, backs to the wall in a tough spot with the US, the largest market in the world. So I think the calls are not unfair that, you should do. And I mean, even the most staunch supporters of the government say for the last couple of years, things have kind of stalled in terms of reforms, etc. So maybe you need to, kickstart that once again. And we do it when you are in a tough kind of a spot historically. So we'll see. There is, of course, Alaska, but there is also New Delhi. which should be in
Red
focus.
Fort and Alaska, both on our radar right now. But it's good to see that there hasn't been too much optimism or market build-up in anticipation of what might come out on 15th of August. But let's prep you up for the last hour of trade. Mitesh is now joining in with his closing strategies. Mitesh.
So I think the index, while Nigel was complaining about Bank Nifty not participating, I think the important part is that the indices have stopped falling. I think on the for the first time in the last many days, when we've seen the markets make lower highs and lower lows as a sequence, this is the first time that we had a bounce back from 24,350, went to about 24,700. The closing was around 24,600 for that candle on the 2-hour chart, and then came down to 24,450. Now we are trading beyond the 24,600 level. So there's something positive which is happening. The indicators have started to slightly turn up in the oversold category, in the oversold zone, which means that we could still be in for a good bounce back. As I maintained, 24,750, 800 is the first level. Once we start getting past that, then I think we might have a stronger bounce back. So in that sense, the tone is slightly turning positive. On the stock side, I have buy on Indian Bank. The stock was trading exceedingly well 2 days back, and then it's completed a pullback in the last 2 days. So buy now with a stop at about 664. Look for a target of around 690 to about 695 on the upside. And the second stop is Laurus Labs. Went to about 920, came down to about 820, and has reversed that, completed the correction. So buy here with a stop at about 847 for targets of 885.
Thank you very much for that. Let's talk about Paytm. That's a big mover in a regulatory boost for Paytm. The RBI has granted an in-principle authorization to operate as an online payment aggregator. Why is this important? Ritu joins in with the updates and the details.
Well, after a near 3-year wait, the Reserve Bank of India has finally granted Paytm's 100% owned subsidiary, Paytm Payment Services Limited, in-principle authorization to operate as an online payment aggregator. Now, that is essentially the business which runs Paytm's digital payment gateway for all of its merchants. But importantly, RBI has also lifted the ban on new online merchant onboarding, which had been in place since November of 2022. But to be clear, even when that ban was in place, Paytm had still been servicing the existing online clients, and it had also been signing up new offline merchants. But this, of course, clears a big regulatory cloud over the payment business. Now, the market is quite crowded. There are more than 50 players that have this license, but Paytm's massive base of 1.3 crore merchants does give it a strong shot at regaining momentum. The timing is also quite interesting. It comes just days after its Chinese investor Ant Fin fully exited Paytm, selling that remaining 5.8% stake. Now, remember, Paytm's initial application in 2022 was returned by RBI, and the company had reapplied for this license only in September last year after getting the government's nod for its downstream investment into PPSL. Keep in mind, though, that the RBI nod right now is not unconditional. The company will have to complete a system and cybersecurity audit within 6 months' time and submit the report to RBI or risk losing the license. Now, brokerages have given the move a thumbs up. Citi says the license win is positive for sentiments because it lifts a major regulatory restriction on the business, and it will help Paytm be more competitive than before. And Bernstein adds that this will have limited immediate impact on metrics, but it is a major relief nonetheless and is going to support higher payment margins for the company over time.
Okay, all right. Thanks a lot for that, Ritu. Well, let's welcome Sudeep Bandyopadhyay, Group Chairman at IndiTrade, who joins us on the show. Hi, Sudeep. Good afternoon. Good to see you, Ben. Markets as well are in a far better place, so it always, livens up the mood. What about Paytm? At 2,000 rupees odd when it came out to this IPO, a lot of investors, they were not too happy. And from there, the stock went all the way down, I think, to around 400 rupees. Now at around 1,100 rupees, the pieces seem to be falling in place. Do you think it's had its good run, or do you think the good run is yet to come?
Good afternoon, Nigel. I think Paytm has gone through the roller coaster ride, really. And you're absolutely right. From the IPO days till about 400 levels and then back to 1,000 plus levels. I think today's news definitely is positive, sentiment positive, definitely. And I think eventually this is a very positive development from the company perspective. Regulatory cloud getting lifted is always a welcome development. But I must say that The field is extremely competitive. Last 3 years, they have lost kind of momentum when the regulatory restrictions were in place on onboarding merchants online. So they have lost some ground, no doubt. And, they have to catch up quite a bit. Of course, they have a strong merchant base and they can do a lot of things and things can move very fast. But we have to wait and see how things move. This is just good for sentiment. As far as valuation is concerned, I think I would say it's kind of fully valued. At this stage, without things actually happening on ground, I don't think I will, recommend a buy or put a target which is above the current levels. In fact, it is fully valued at these levels.
Okay, Sudeep, the other one is another, if I can call this a digital business, it is a digital business. NSDL is what I'm talking about. In focus after their numbers, stock's done very well from the listing price, but today it's down. And Vamakshi is here with the results and what the street made of the first numbers post-listing. Vamakshi, take it away.
Well, yes, a mixed set of numbers coming in from NSDL. The revenue saw a decline of almost 14% quarter on quarter, but the decline in the total operating expenses was at a much faster pace of almost 20.5% sequentially. This resulted in the EBITDA margin expanding by 543 basis points to 30.5%. The EBITDA was up 4.4% and the net profit saw a much sharper uptick of almost 7.6% sequentially, driven by largely a 15% jump in the company's other income quarter on quarter. Now let's look at how different segments performed. The core depository business, which accounts for a significant portion of the company's revenue, saw a decline of almost 3.4%. The big hit came in from the banking segment, which declined by almost 26% quarter on quarter. But margins on the flip side improved across the board. The highest improvement came in for the database management business, which saw an improvement of almost 450 basis points. The depository business margins also improved by 380 basis points. But the margins for banking saw a limited improvement of around 46 basis points. Let's take a look at the valuations. Based on the closing price yesterday, NSDL trades at 72 times. This is coming in at a significant premium to CDSL, which trades at 53 times. So not a great set of numbers from NSDL. Valuations are relatively higher. Resultantly, the stock is tanking in trade today.
Okay, look at the valuations there. NSDL, Sudeep, any thoughts here?
I've been always saying that I think, if you look at the matrix, CDSL is much better positioned in terms of margins and in terms of future revenue as well. Because CDSL have got 4 times the number of folios compared to NSDL. And in this business, remember, per transaction is what you make. So obviously the opportunity for CDSL to make money when the market is good is significantly higher. And even when the market is not so good, their pressure on CDSL will be much lower than NSDL. So under the circumstances, I think, the NSDL attracting a much higher valuation multiple compared to CDSL is not a viable proposition. So I would say, at least they should be similar multiples, or if at all, they should be at a lower multiple compared to CDSL. The multiple at which they came in when they did the IPO, I think that was more realistic than what they're quoting now.
I think that time it was about 45, 50 times and at a discount to CDSL, considering that CDSL was growing faster, better margins and gaining market share. But now with the run-up in NSDL, it's become more expensive. Sudeep, stay on. Apollo Hospitals is surging in trade on the back of strong Q1 earnings. Earlier today, we caught up with Sunita Reddy, Managing Director at Apollo Hospitals. This is what she had to say about their expansion plans and the demerger.
Currently, we're opening Pune with 250 beds by the third quarter. We're opening Defence Colony this quarter with 87 beds. Defence Colony is a fully focused women's healthcare, including on-call unit. We have Sonapur in Calcutta with 250 beds, as well as Belapur. So Belapur is an acquisition, Belinis Hospital, which is an acquisition in Bangalore with 150 beds. So these are the 4 hospitals that we will be opening in the third and fourth quarter of the year. In terms of addition, we're looking at 500 beds added this year. It's been approved by the board. I think we've made the application to CCI and NCLT. This should take about 18 months. In about 18 months, we should be ready to announce, and following that, AGM approval, we should be able to list. We continue to look at acquisitions. Let me just put this one figure before you. Of the 16 lakh beds in the private sector, 1 lakh are, are totally private, held by trusts, etc. They are only less than 50,000 corporate beds. So there is a huge structural demand-supply gap.
Okay, that's Apollo Hospitals. Sudeep, generally the numbers from hospital companies has been good. Apollo Hospitals is, 15% revenue growth year on year, steady margins. Max Health came out with numbers a while back. Here, the top line growth is 27%. In the hospital space, which is the most attractive stock, according to you?
Well, I like Apollo Hospitals and I've been liking it for quite some time. And I believe it still has a long way to go. I think the way they have been going about their business is, absolutely copybook. And, the demerger also is a very welcome step. It will happen over a period of time. But I think it's a fantastic step. Consolidation is happening big time in the industry. The acquisitions are happening. Apollo has been also in the forefront of acquisitions. And I think, the way they have been increasing the average revenue per patient per bed also is commendable. So even the online business, which was kind of a drag, I think that also has improved significantly. So I am definitely positive on the entire hospital sector and Apollo in particular.
Apollo in particular. Any other single stocks on your radar? We reported, Sudeep, this was, of course, yesterday's story, that the Suzlon CFO is leaving to join what was erstwhile Indiabulls Housing. Of course, Indiabulls Housing had been a troubled name in the past with a lot of issues. I think the book, etc., has been cleaned up. Himanshu Modi has put in his papers. That news came out yesterday. And we'll see if the actual announcement of him joining what is now called Sammaan Capital happens or not. I don't know if you've looked at this company or any thoughts at all. Sudeep?
Well, I've looked at both. In fact, Suzlon I do like. And I think, of course, Mr. Modi leaving will be probably a bit of a challenge, but they will get a new CFO. And the business is on a good pace at this stage. Mr. Chalsani has been an experienced hand and he has been running it pretty efficiently. So I think, I won't change my view on Suzlon based on this exit. As far as Sammaan Capital, professionalizing and more bringing in high quality professionals is a welcome step. You're absolutely right. There were a lot of question marks and challenges which erstwhile Indiabulls Housing did face. And with experienced professionals coming in, I'm sure things will be better. As of now, I think overall we are positive on housing finance sector, and Sammaan Capital has a large housing finance book. So we are positive overall, but specifically Sammaan Capital, we haven't done much work.
Okay. All right. Sudeep, I wanted your view on JM Financial. Yesterday we had the management who joined in on the show. I had this show, on Finding Alpha, and Digant Arya, he was talking about this one being the dark horse and it could relatively outperform from here on. If you look at their presentation as well, they've clearly given a far clearer path on the way ahead. And the street, it looks like, is taking note of it. At around 185 rupees, everything's in the price, or do you think it has more to go?
No, I think it has got more to go, Nigel. In fact, I do like JM as well. I think they're, getting the pieces right, and the growth opportunity is significant. There are some financial businesses which have grown to an extent, and future growth will be only incremental. Whereas in case of this particular company, I think exponential growth from here on is definitely possible. They're getting all the pieces right now, and we are positive on JM Financial. The results were pretty good.
In fact, Digant has put out a view on his handle. Strong traction in capital markets, expansion in wealth management, scale up in private credit, and stake sale in HFC at 3.2 times book. Those are the reasons. The old business, the NPA pain is over, and recovery has started as well. So that's one of the big movers. So there are a couple of more questions. Then Orient Pro, that's up close to around 7.5%. The stock, I recall, had gone one way, and then from the top, it did see a correction. But earlier today, it got around a 250 crore order with regard to the metro. The street likes it. Volumes are very, very large on this name. What's your view?
Nigel, I'm a little skeptical of this entire, what is happening in the market. The moment a company gets an order, there is excitement built around the counter and the prices start shooting up. See, we have to understand that there is a difference between, getting an order and successfully executing it and, making it a profitable proposition. So I normally look at these kind of excitement with a lot of caution and, care. And I will say that, there's no need for this kind of excitement based on this order win. Yes, I think things are slowly but steadily improving, but I won't, subscribe to buying the stock at today's elevated price.
Got it. Well pointed out, Sudeep. Thanks a lot for joining in and giving us your view on that name as well. Not too impressed with Orient Pro at this particular price. By the way, the accident of the last 1 hour is Insecticides India. Pull up the intraday chart on that stock. It's falling on very, very large volumes. I think Insecticides India should come up for you on the screen. I think it's down closer around, it's down 9%. Just take a look at that. What a fall on that name. So big downtick is what we're seeing on that one. On the flip side, I think Fact came out with its set of numbers and the street likes it. So that stock as well has spiked up in the last few minutes. Yes, Rima.
Insecticides numbers, just to recap, revenues up 5.2%. EBITDA margins 12.2 versus 11%. So there is margin improvement. There is modest growth at the top line, 5.2% revenue growth, and profit up 17.5%. But clearly, the street doesn't like even modest growth.
I think volumes, just to be sure, I don't know, volumes are some 20,000 shares so far, right? I mean, in terms of 22,000 shares. Or
someone just press sell on.
I mean, it's kind of a low volume kind of name, but it's fallen. You're absolutely right.
No,
$100.
It's a large volume, actually. Just take a look. 4 lakh shares, maybe on one exchange, Prashant, you're looking at. It's 4 lakh.
Yeah, sorry, 4 lakh shares. 4 lakh shares on the NSE.
And I think on the other exchange, it must be relatively lower. So falling on rather large volumes on that one. I'll tell you what, we'll slip into a short break. Come back, we'll continue to focus on the markets. We'll also be joined by Dinshaw Irani. Stay with us.
Welcome back. On Insecticides India, all we know is that the last time the company spoke to us, which is post their Q4 numbers, they said that FY25 was a tough year. But in FY26, the company was expecting to see more than a 10% revenue growth in FY26. And versus that, they've done a top line of 5.2%. So versus expectations for the full year, it's been a bit of a subdued start. But we'll wait for more what the company has to say. But let's talk about Hindalco. Numbers came out yesterday. I mean, it didn't react so much yesterday. I mean, it did come out in the last 10, half an hour.
Yeah.
But today you're seeing the big move.
Well, that's right. You know, the global cues as well are positive. If you look at optimism with regard to Fed rate cuts, as well as there is some optimism that China is going to pepper the economy out there. So both those two are working in favor. So the global backdrop actually is positive. The results were mixed. Yesterday on this show itself, we had told you that Hindalco's numbers actually look good. The India business, while Novelis was weak. So on that front, it's actually a little bit of a mixed set that we saw in terms of their numbers. Let's take you through the India piece, which was good. Aluminium business, EBITDA number, 4,300 crores, better than the 4,000 crores. Copper business, 670 crores, better than the 600 crores that we were working with. So on both those two parameters, the EBITDA number was a beat. Added to that, at the start of the day, we had news that Novelis's debt had gone up mildly. But on a consolidated basis, because the India business is throwing up so much of cash, their net cash as it is, and the net debt number actually has improved on a sequential basis and even on a year-on-year basis. So that's heartening to see because they've been incurring a big capex. Moving to Novelis, that's a bit of a problem pocket. The EBITDA per ton number came out around $432 per ton. The street was working with a number of around $450 per ton. So you'll say that is disappointing. Yes, it is. And in the first quarter, the tariff impact was around $28 million. Now, the management said that since the tariff actually has been fixed at 50% instead of 25%, the impact on a quarterly run rate could be around $60 million. Earlier, they were talking about $40 million. So in quarter two, in all probability, you'll have a negative impact of around $60 million. Now, that as well is negative. But the management is calling out that this is bottoming out of the EBITDA and things will improve from here on. That's because they're going ahead and they're focusing on the cost side, and they're looking at saving close to around $100 million by the end of this year. In the coming years, they're talking about a number of around $300 million odd, and earlier they were talking about $75 million in the near term, which now they've upped to around $100 million. So the street likes it that the management is actually calling out that things will bottom out from here on. The management spoke to me earlier today. They said that the quarter 2 performance for Novelis will be similar to what we saw in quarter 1. But in the second half of the year, they're saying the aspiration is to gradually head towards that $500 on a per ton basis. So that's encouraging to hear. And in terms of brokerages, various brokerages were skittish, but CLSA, they have an outperform rating, target price of around 850 rupees per share. They're expecting the capex to peak out, and they're expecting the consolidated leverage will be sub 2 times. So put everything together, global backdrop is good, India business is doing quite well, and they are calling out that the Novelis business will actually bottom out. Street likes it. Stock, one of the top gainers on the Nifty.
Okay, let's move on and get to some more stocks which are buzzing. Hormus is now putting the spotlight on the top movers at this hour.
Well, the earnings season is calling it time for the quarter with a bang with these outsized moves today. But look at NMDC Steel here, 20% higher on the stock now. It's the biggest single day gain on record for the stock. And we have already had 10 crore shares being traded compared to the 20-day average of just around 13 lakh shares. Another outsized move seen in JM Financial. It is the 6th day that the stock is gaining today. This is the biggest single day gain that the stock has seen since April of 2020. The 16% move. We've already had close to 6.5 crore shares that have changed hands, and a 20-day average is just 60 lakh. And this year, the stock has already risen 40%, and this is the best calendar year return that it has seen since 2017. JN Irrigation is the other one that has seen double-digit gains today. It's the biggest single-day gain seen since June of last year. Now, before gaining on Monday's trading session, the stock was down for 10 days in a row. And in today's session, the stock has gained on volumes that have had almost over 2 crore shares traded, 20-day average at just 18 lakh. But despite this 14% up move, the stock is still down 22% on a year-to-date basis. An interesting name here is Windlass Biotech, and this CRAMS player is gained the most since February of this year. It's the 3rd straight day of gains, but we've already had 10 lakh shares being changing hands. The 20-day average is just 50,000. Now, this is one of those IPOs that listed at a discount. It made a low of around 200 rupees, and from there the stock is up 5x, and from its IPO price, which was 460, the stock is up almost 2.5 times. And lastly, to balance it out, we'll give a name on the downside as well. Rupa and Company is one of them, and the stock has had a pattern. It's down 8.5% today, but over the last 5 weeks, the stock has had a pattern of gaining only once every week, and the rest of the sessions that has declined. In today's session, the stock is down on volumes that have had 5.5 lakh shares compared to around 1.2 lakh being the 20-day average. It's down 20% this year, and this is the 4th straight year that the stock has had negative returns. Back to you guys.
All right, Hormus, thanks very much. Rupa and Company, not talked or heard about that name for a while now, but it's...
What a pattern he's found.
Yeah,
it's gained only once in a week for the last 5 weeks.
For the last 5 weeks.
Amazing. First bencher in the class. Hormus always on top of his game, completing his homework. Good guy. Lovely.
Arey, come on. Anyway,
Thanks, Hormus. Thanks.
Let's bring in Dinshaw Irani, CEO, Helios Mutual Fund, is with us. Dinshaw, good afternoon. Great to have you with us here. Thanks for joining us. We'll talk about markets broadly in a bit, Dinshaw, but I reckon you have Paytm in your portfolio, right?
Yeah, Prashant, first of all, thank you for having me on your show, and a very good morning, good afternoon to you and your viewers. Yes, we have a Paytm in our portfolio. In fact, all our top 4 holdings have been doing fairly well for us. Paytm is one of the top 4 in the portfolio.
Okay. Which are the other 3?
There's Eternal, there's ICICI Bank, and HDFC Bank.
All 2 digital businesses, and actually the other 2 also would like to call themselves digital businesses. All 4. Yeah. Paytm, you think there will be continued... have you discussed this with the team? Obviously, you own it. You think there is more upside here. But do you think there is more regulatory easing which is possible, or it's done? They can onboard merchants now, which was disallowed. Is there anything else to do?
I think, Prashant, it's just a starting for not only Paytm, but all the fintech guys, in the sense that India's got a long way to go anyways. And obviously, Paytm being the biggest, and we've loved this stock for a while. We didn't obviously participate in the IPO, but we came in at the time when the stock was looking fairly exciting. After that, the regulatory issues happened also, and still we started adding to that stock even during on the way down. And frankly, I mean, the stock has been one of the best performing in our portfolio today. And in fact, even today, if I'm not too mistaken, my CIO who doesn't believe in keeping any cash in his portfolio, in fact, every morning he shakes his fund managers to find if there's any loose change. I'm sure he would have again added to the name as such, because that's how comfortable we are with that stock. And I think it's got a long way to go. It's not even touched the tip of the iceberg today.
What else is coming in terms of recommendation that your CIO is buying? You can't hold cash, money is coming in. So what have you been buying in the last, say, 1 month?
No, we can hold cash, Reema, but we don't like to hold cash because we believe in markets like ours. It's a sin to hold cash as such. And frankly, I mean, there's always ideas. Like Eternal was one of the ideas that we liked at the very beginning itself. And obviously, we played along with that idea. I'm sure there are others also, which you'll see when you see the portfolio getting declared. You've already seen in the July in the portfolio, there are a few names which were added. And again, going forward, you'll see a few more names getting added again. Always.
The July additions? Which ones?
So basically, I think a couple of new names which came in. I don't remember the exact names, but if you look up the portfolio, you'll see the names as such. I think Aether Energy was one of them, which we had picked up. I won't know beyond that.
Yeah, PNB Housing as well?
So PNB Housing, yes, that's been there for a while with us.
You have not topped up on that one?
We did add to that one in the recent correction that came by.
So clearly, new age tech companies, so-called, something that you like, Eternal, maybe even Aether Energy. What about Honasa and Nykaa? These are the two flavors. So anything in the consumer pack?
So, okay, the fact is that when you're looking at these new age companies, you want a very, galloping top line kind of a growth, which we don't see, at least in the case of Honasa. Nykaa still, I think the maturity levels are still there, but frankly, I mean, in both these names, we weren't too excited, though the numbers were pretty good. And that they were good mainly because of the way the margins expanded rather than the other way around. So I think we are looking for more of a, when you're a new age company, you're obviously looking at capturing market shares and stuff like that. That doesn't seem to be playing out in these two names. So we are avoiding these two names as of now.
Dinshaw, what about tech? I don't think you were too positive on the traditional tech names. You're nodding your head as that comes, as I'm going to deliver that one itself, you're saying, no, that's not the delivery that I want. But, it's suddenly started holding its own, the negative news flow is being ignored. The growth is going to be very, very tepid, we know that. But in terms of valuations, the yields, still it doesn't excite you at all?
So, okay, Nigel, let's go back a bit and let's see the valuations, what these guys were commanding. Probably pre-COVID, right? Pre-COVID, the growth rates were like the same as what you see, not even same. They were slightly more than what you see today. In fact, they were high single digits kind of growths. The valuations of the top line, I mean, top end IT companies were 17, 18 times forward earnings. Even today, after these corrections, they're still at 20, mid-20s kind of Ps. As such, for a growth rate which is like mid-single digits to low single digits. So still not exciting for us, frankly. I mean, but the point is not that. I mean, if obviously if the valuations were lower, we would have looked at those very benignly. But the fact is that there's a lot of uncertainty today playing out with these guys. One of the rejection factors that we have is medium-term triggers. Now, medium-term triggers, AI, I think, if anything, is not a big positive for them. And that's what we want to see how that plays out. Once that plays out properly, then probably we'll look at it with a fresh lens. But as of now, we're not at all comfortable. And obviously, given the uncertainties in the US, the way the businesses are, I mean, the way the tariffs are being negotiated and stuff like that, I don't see much of businesses prospering in the US itself anyways. So discretionary spends won't be happening. So that's why we are rather better off staying away from IT as of now.
You have Motilal Oswal Financial Services in your portfolio. Actually, April was, obviously it's all benefit of hindsight, right? But $500 was the low on Motilal Oswal. Stock's at 930 rupees now. So you got to, I mean, the lesson has been any meaningful, non-meaningful dip you got to grab.
So yeah, obviously, I mean, Prashant, if you convinced on your stocks, and that's what helps us. I mean, our philosophy of elimination investing is what helps us in understanding why we actually don't select stocks, we reject stocks. So whatever remains behind, we know what is the reason why the stock is behind you. I mean, why it is there with you. And obviously, till the time you don't hit any of those rejection factors, you keep lapping up that name as and when you see an opportunity coming by. And actually, not only Motilal, that same happened in the case of Eternal, the same happened in the case of Paytm. And in fact, the Ather Energy that I talked about, again, the stock after our buying went down, but we were very convinced on that name. And you've seen after that what has happened in that name as such. So that's what helps you around. The conviction of your picks is what helps you in probably averaging it out at the right time, I suppose.
Ather, there's still, it's not, I mean, as an owner of the stock, there's, I'm assuming, a decent upside, right? I mean, if it works out, it's not run away.
So none of the stocks are slam dunks, right? I mean, the fact is that what was the reason why we bought Ather? We bought Ather because at that point in time when we bought it, the market cap was around $1 billion odd. The market share of that company was around 15-16% in the EV space, two-wheeler EV space. Now, the whole logic here was that is the Indian EV space worth what, $6 odd billion, $5 to $6 billion? No, it was not, right? I mean, the same reason is why we bought an Ola. By the way, that's one of the new names that you will see in our portfolio. You will see, as in you've already seen in the July portfolio. So obviously, these are the reasons that we pick up these names. There are macro stories. Growth rate is insured. The fact is that these are changing, and that's why we believe that this is the way forward. The new age companies, the new technologies, that's what you want to play with. And frankly, I mean, we've always been clear about our philosophy that, rather our investment strategy, that you have to be inward looking. You have to look at only India growth stories and not China +1 plays and stuff like that, which can be decimated by way the tariff has panned out for us.
But you all did add to your position in Gokuldas Exports, is that correct, in the month of July?
No, we didn't. We did actually. No, we didn't. In fact, you would see that the weight has gone down per se. The fact was that we were also taken aback by that additional 25% which came by. And obviously, we were quite wary of the first 25% that was being applied to it. So that's why we rather decided to stay away from that. And whatever was remaining was lying in our portfolio, per se, and we didn't touch it.
Yeah. Just one thing, Ola is going to be 15th of August is when they have that annual event at their factory, the border of Tamil Nadu and Karnataka, and they will unveil bikes, I think, this time around. And we will, of course, we report on that, and our reporter will be there to track the developments. Ola, of course, is a recent addition, as you said, to the portfolio at Helios. Thank you very much for joining us. Good speaking with you, and really appreciate it. Thank you.
Thank you.
Okay. All right. Thanks a lot for that, Dinshaw. Well, let's move on then. Nimesh is waiting by. He is going to tell us what he's picking up in D Street Chatter. Nimesh, take it away.
Hi, Nigel. A decent pullback, but the big question is, can it sustain? And all will get answered as to what happens in that big meeting on 15th with the global leaders. So that's going to be a big trigger to watch out for as far as India is concerned. But, given that we've recently underperformed and valuations have become a bit attractive, and technically also there could be a sharp, short covering rally. It looks like we can head for a decent pullback. It could be short term, but it could be a very fast and a very sharp, decent pullback. So that's something people are betting on from a market technical perspective. Flow-wise, again, it's a mixed day, but first signs of buying interest back in the technology names. So that's a bit of a contra view as far as positioning from large institutions are concerned. A bit of buying back in the technology stocks today. The other sectors which have done well is defense and metals, and it looks like more or less it's more of a short covering rally on those sectors rather than genuine buying. But broadly, the position-wise, it do suggest that if something positive comes up over the weekend, you might see a very sharp short covering rally in the Indian markets, at least in the very near term. So that's something to brace for.
What about stocks, Nimesh?
Well, so in terms of individual names, the theme of fundraising continues. So the first stock is Blue Jet Pharma. The stocks are very sharp correction after the earnings, but I understand there could be a fundraising via QIP very soon. So that's the first stock to watch out. The second stock is IndusInd Bank. Well, it's been under pressure of late because of various reports as well. But from a flow perspective, I understand one large long-only fund has started selling or trimming into IndusInd Bank in the last few days, and hence a bit of supply there. The third stock is a couple of names where there was block deals today. Zinca Logistics, there is a 1% equity got change hands, and we've seen a recovery there. And even in Jain Irrigation, big volumes on that stock, and the stock has reacted sharply, almost 15% up in Jain Irrigation as well. In Jain Irrigation, the feedback is, there are a couple of the PSU banks which were looking to sell. If that gets cleaned out, you might see a bit of a sharp rally in that stock as well. So need to see whether there is a disclosure in terms of any PSUs banks selling out of Jain Irrigation. And the last name is Manappuram Finance. The stock has been consolidating post the earnings, but first signs of flows back in from larger HNIs. And I understand some large HNIs have bought as well in today's market into Manappuram. But again, for Manappuram, the big trigger to watch would be the approval for the open offer. That's still pending. So that's the next trigger to watch out as far as Manappuram is concerned.
All right. Thank you very much, Nimesh, for that. So those are individual names in focus. Let's take a quick commercial break here. We get you trades, near-term trades with our technical experts coming up.
Welcome back. It's above 24,600, but not quite getting to yesterday's higher levels of 24,700. So holding pat with a gain of 130 points. Mitesh is back with us for a few BTST calls. Mitesh.
See, a lot of action and strong price momentum is seen in the hotel stocks. Look at EIH Indian Hotel. So I picked up Indian Hotel as a BTST call. Keep a stop at about 763 half and look for a target of around 780, 782 for tomorrow. And the other name which I like, that's on the IT side, that's LTIM. It's just trying to reverse. Yesterday was bounced back. Today is a flat day, but the hourly indicators have started crossing over. So we'll take a BTST here with a stop below 50.99 and a target of 51.60.
Thank you. Got that. Let's now go across to Nigel. He's going to fill us in with the latest trends from the futures and options space.
Well, it's a good steady session for the bulls. The problem is the main, the main part of the index that actually normally swings it is not performing. That's the Nifty Bank. It continues to underperform and it's not able to hold on to the higher levels. So as we speak, it's hovering around the 100 DMA. So the Nifty Bank is the one that's underperforming. The India VIX, that's the big trigger, right? Till it runs away, that's when the traders will get a little bit skittish. But for the time being, it's very well behaved, sub that 15-odd mark, and that continues to remain lower. The PCR, what started today's trading session at around 0.75, 0.8, that's moved to around 1.1 because the put writers, they come back. And remember, tomorrow we'll play out the weekly expiry. So these put writers, they're going in there, they're writing various strikes. 24,600 put, 24,500 put. Just take a look at the premium out there. It's down drastically from the morning trading session itself. On the 24,600 put itself, we're seeing it down drastically, and 24,500 put. Now, these writers, they are hoping that this 24,420 odd level holds out, because at the start of today, it was more than 75 rupees. So big drawdown out there. So in terms of levels that we're looking at, the broad range, 24,450 on the upside, 24,750. Going by the options data as well, the bears will believe that they can defend this higher level of around this 24,750. In terms of stocks that I'm looking at, BSE, we had the management who joined us yesterday. The street is feeling rather good about it because yesterday as well, the premium volumes were very, very strong. In fact, it was the highest we've seen in multiple weeks, and yesterday was the expiry out there. So you have the open interest that is down, the stock is up. Clearly telling you there's a bit of a short covering bounce that's playing out. Nykaa, that's the other one in there. Just take a look at the massive open interest build up. More than 10% build up of open interest. The stock is moving up. There's long build up out there. And finally, PNB Housing Finance will track the stock today as well as tomorrow because there is unwinding yet again. Yesterday, there was massive unwinding. As a percentage of MWPL, the open interest was around 84%, market-wide position limit. As I checked last, it's at around 82%. So there's a slim chance that it moves out of the F&O ban. But in the next few trading sessions, if there is unwinding on these lines, then that's the one that could come out of the F&O ban. Back to you.
Nigel, thanks very much for that. So that's the F&O perspective, the F&O action live coming through from the F&O desk. Mayuresh Joshi is with us to run us through what he's making of things. Mayuresh, So, tomorrow is the last day of the week. And then day after, there is the PM speech, and then there is the summit in Alaska with regards to Ukraine. So there are some important triggers from a market perspective. Near term, do you have a view? Is the risk to the upside, to the downside? What's your sense? Is there a big move around?
Afternoon, Prashant. No, I think there are a lot of events, as you just pegged off. And therefore, I think the markets will be viewing these events with a very, very sharp and keen eye. Obviously, I think what we've gone through at this juncture, I think the markets have gestated the worst, both in terms of the tariff imposition that has probably happened on India, as well as the expectations in terms of what might happen going forward as well. Obviously, I think Trump has deferred the entire China thing by 90 odd days. He's obviously visiting Russia in a resolution to probably stop the Ukraine war. And therefore, I think the markets are globally taking on these events very, very positively. From our perspective itself, I think a combination of factors together, including expectations of how earnings will play out and richer valuations, is something that capped market gains. But in my opinion, and how we see it at Markets Made India, I think even if distribution days have gone up, which means that the correction that we've seen in the last few days have really taken Nifty way down as we speak on the downside. But I think there is not much of a downside risk as we see it. There is expectations of earnings improvement over the next few quarters. And there is expectation that as resolutions start happening on the global front, I think things might normalize even as FPI and FDI flows have moderated to a large extent. Domestic flows have remained extremely strong. And therefore, a combination of these factors, corporate earnings expected to improve, and expectations in terms of global macros probably just bottoming out in terms of the worst, in terms of what the markets are expecting, might actually prop markets higher. So I think structural downside is something that we are not foreseeing for the Indian markets.
Okay. All right. Hi, Mayuresh. Good to see you. Mayuresh, any view on HPL Engineering? We're talking about a sluggish market, things not moving too well. This stock is up 25% in this week.
It's in a new one.
Yeah.
Back to highs. Yeah.
Absolutely. It saw a big correction and the stock has run away. Any view? HPL Engineering?
I think we don't track this one, Nigel, but I think an interesting space within the capital goods or infrastructure stories, one which I've always carried in our local and global portfolios, Pennar Industries, and also its competitor to a certain extent, Interact, built developers. I think somewhere what is happening is the expectations in terms of pre-engineering buildings and the market size itself. The expectation here is that from 18,000 crore market that exists for pre-engineered buildings, that can actually double over the next 3 to 4 years. Again, a large part of the market is unorganized, and therefore I think organized players like a Pennar or an Interact might actually start benefiting quite significantly. And therefore our own sense is that integrated facilities with expansions that are probably happening for both these companies put together, earnings growth along with market share gains, because there are very limited players within the organized players and the listed players itself that can have a decent chunk of new orders probably flowing their way with better margins and with capacities at their behest as they continue executing well. I think forward-looking numbers might be good. So we're not covering it, but I think a few of these pre-engineering stocks, EV stocks, might actually do well.
All right. Mayuresh, I wanted to ask you about Bajaj Housing. I recall when it listed, there was so much excitement. The stock became so expensive. If I'm not mistaken, let's pull up a one-year chart. It went all the way to around 185 or thereabouts. And from there, it's come down to around 110 rupees. Bajaj Housing is the one I'm talking about. Let's get the right stock first up for our viewers on the screen. Not Bajaj Finance. I do want a longer term chart. Bajaj Housing is what we're talking about. Let's get it up for our viewers. It's down close to around 3%. And, post listing, the stock went dancing away to around 185 rupees. Mayuresh, what's the view on this name? It ran ahead of itself, but at around 108, what's your view? I'll tell you why I'm asking you. In the SLBM market, there's unusually very, very high volume out here. It's 35 to around 40 lakh. You never know, maybe there's fresh supply that's likely to come in there. What's your view on it?
Oh, so if it corrects a little more, Nigel, I think it will start looking very, very attractive. Obviously, I think the expectation here is that with the rate cuts that have probably happened, the cost of borrowing for better rated players will obviously be at the forefront. And better rated players like a Bajaj Housing, which has a very strong parent or a parent pedigree, somewhere like LLIC Housing, PNB Housing as well. Yes, there has been a management change out there, but the core dynamics of the business still remain intact and extremely strong in our opinion. And therefore, I think with rate cuts, a lot of fence sitters who are probably looking at mortgages, registrations are still looking extremely strong. You look at the registration data in Mumbai, in Maharashtra, across the length and breadth of the country, still remains very, very stable. And therefore, I think the element of growth expected to come through with asset quality pressures expected to remain benign. I think a combination of these two factors, along with better capital adequacy for the better rated players, will obviously mean better balance sheet growth, better ROEs and better ROAs as well. And therefore, I think if it declines further, yes, I think this stock will make a proper base as we look at it in markets with India. But something like a PNB Housing as well, with the correction that has probably happened, the affordable and the emerging segment where the yields are significantly higher for PNB Housing, and they've got a very good handle in terms of asset quality issues as well, might actually do it.
All right. Mayur, stay with us. There's about 8 minutes to go for market close. A bunch of other names we want to discuss with you. Shilpa Medicare has just reported numbers, and stocks moved up 2% from the time that the numbers came. So it's up total 47 crores in profits compared to 14-15 crores same time last year. And I think margins are 28.5% compared to 25%. These are year-on-year comparison numbers. Revenues are up 10-12%, but there is a big improvement as far as the net number goes. So Shilpa Medicare in focus, 9-10 more on this one in a bit. We'll take a break. See you on the other side. Okay, welcome back. There's about 3 minutes to go, 3 minutes, 20 seconds to go for market closing. Mayuresh is with us. Mayuresh, any thoughts on Force Motors? Big move today, but more importantly, 200% this year so far. YTD, Mayuresh, big re-rating here.
Oh, absolutely. So anybody holding can continue holding because I think the momentum remains extremely strong with them. The expectation largely is that the kind of product mix that they have, it should largely start benefiting them. And it has already started getting displayed on numbers. So somewhere I think the expectation and the hope on the street is that the product mix probably holds out for them. The expectation from a margin performance holds out for them as well. And therefore, I think anybody holding on to this stock should continue holding. Our top pick, Prashant, within the auto universe remains Hyundai India within the four-wheelers and TVS Motors within the two-wheelers.
Mayuresh, you track the agrochem space also closely. I think last time you were talking about Zuari Agro. Insecticides India, have you analyzed the numbers? The stock has fallen off a cliff, 11% down.
Didn't get the time, Lima, but honestly, I think this space looks very, very interesting even now. I think what has really happened and transpired is that the volumes have remained extremely robust. With the early onset of monsoons this time around, the farm gate prices, which had remained extremely stable, are expected to remain stable going forward as well. And with input cost remaining very, very soft and benign, I think that leverage component obviously played out for a whole host of players within this space itself. Again, going forward, I think with a better monsoon around, with a better Kharif season, there is expectation of a better Rabi season because of the better moisture content that might still remain. And therefore, I think the hope for agrochemical players to probably have a better show going forward as well, with better control on costs will mean better numbers on the bottom line as well. So very, very interesting space. I think we continue holding stocks like a Coromandel, Deepak. I discussed stocks like a Paradeep, Bangalore as well.
Okay.
Premier Explosives, last word, quick word. Mayuresh, do you track it?
Decent order book, Prashant. I think 2.5 times of FY24 revenues. Margins have been pretty decent this time around at 15%. They executed well, specifically on their defense segment. Even a large component of their order book is largely defense, more than 80%. And therefore, I think the expectation is that the execution should continue happening at a very, very decent pace. Margins, again, I think if you historically look at margins as a comparison to last year, were significantly higher. So if they're able to execute well, and the cost of material is under control, I think there can be every scope of margin expansion as well. So I think good set of numbers getting.
All right, I think we're at the end of the show and closing bell here, but Mayuresh, stay with us. We're going to talk to you on markets forward in just a bit as we wrap up things. So a pretty good day all told. Much better though, I think, for the mid and small cap indices with 0.65, 0.7% kind of gains. 0.6 on the Nifty as well. The Nifty Bank was up just about 0.25%, so a little behind as compared to the other three indices coming through. So lots of moves actually today. No dearth of big moves. Apollo Hospitals by far the big one, 7%. But there was also Hindalco, Dr. Reddy's, Cipla, Hero in the 2% range. Bharat Electronics, etc. No noticeable large Nifty loser coming through today. And of course, I mean, Rima, lots of broader market, mid and small cap moves as well.
JM Financial 13% up. Force Motors now touching the 20,000 rupee mark. Yatra Online continues to gain 9% up for the day. For the week, 56% higher. Honasa, Nykaa. These were some of the big gainers in the mid-cap universe. Add to that an NMDC Steel, Premier Explosive. Paytm had a good session on the back of a regulatory relief. On the way down, softness seen in Insecticides India, NSDL, Wari Energies, and Aarti Pharma too sold off in pretty large volume.
Well, that's right. To name a few more big movers, Jain Irrigation was up 12%, EIH was up close to 12.5%. You had Lloyd's Enterprises as well ahead of its numbers. That stock was up close to around 5.5%. So big move out there. Vishal Mega Mart moving on very, very large volumes. Another one in the last few minutes that came out of the set of numbers was Shilpa Medicare. The stock went up close to around 5% in reaction to its numbers. The street liked what they saw, and that got locked immediately. So 5% higher on that one. While MIRC Electronics, that stock, in fact, it was locked up. It's been rallying for the last few sessions. Nimesh had alerted us about that board meeting that was today. But from the high of the day, MIRC, that's the one we're talking about, that did end actually closer lower. So it's come off drastically from the highs of the day. But a good session nonetheless. For the bulls, we go home with gains of around 130 points. The Nifty Bank, a relative underperformer. On that note, though, we'll wrap up on this edition of Closing Bell. You don't go anywhere. Markets Forward comes up next.